right, so we're gonna get a little bit more, I'll review again that wage bracket method where, that we did some of that on Tuesday. We'll do some more practice problems using that today, and we'll do that together. And then we'll get into the percentage method as well and how to calculate withholding based on that percentage method. What else do I have? Oh, so these are just the 4 types of information that are needed for both of these methods. And again, this is a minimum amount of information. There may be additional information that's used, such as, you know, the child tax credit, credit for other dependents, if there are other types of income that they wanted included to base their withholding, all that information that's on the W-4. But at a minimum, we need these 4 pieces of information in order to use either one of these methods. Okay? All right. So let's go back. Let's put these up because we're going to do some more practice problems on the wage bracket method here. So we need taxable wages. 1, 2, filing status. 3, frequency of pay. And these aren't in any particular order, by the way. They're just as I remember them myself. And then that checkbox. And remember, that comes from the W-4 form. Yes? No? So, I mean, all of this information comes from the W-4 form, but that checkbox is under part 2 of the W-4 form, whether or not that has been checked by the employee. So we are going to need, let me do it this way. And you'll probably want to pull this up as well, this publication 15T. So we're going to be using the wage bracket method, tables for manual payroll systems with forms W-4 from 2020 or later. And like I said, we will get into using these worksheets, but first I want to get you more familiar with these tables. So recall that in order to use the wage bracket method, we have to be under a certain amount of income. So let's take a look at the income levels here for the different filing statuses, or no, I'm sorry, the different pay frequencies. Oh, and I just completely lost where it was. All right, page 12. So again, that first pay period, it's all going to be listed up here. So weekly payroll period. So if we've got an individual who has earned on a weekly basis more than $1,925, this is the end of the table here, we cannot use this method anymore. We have to use the percentage method. If they've earned under that amount, then as a professional, you can choose which one you're gonna use. Your homework problems should tell you which one to use, but they may phrase it as though to use the appropriate method. So if it's under the threshold, you would want to use the table. If it's over the threshold, you'd want to use the percentage method. Okay? So that terminology may be, like I said, it may specifically tell you which one to use. It may have you use your judgment in which one is appropriate to use, depending upon income. So on a weekly basis, that threshold is $19.25. And then we get into the bi-weekly payroll period. And again, be careful, make sure you're using the correct table. They all look the same. They're just very, the differences in them are small, but you've got to pick them out. So on a bi-weekly basis, again, that's 26 pays per year. That threshold would be $3,870. That's our last number on the bi-weekly table. Semi-monthly basis, you see these are getting larger each time, because of course we're talking about longer spans of time for pay. $4,175. So if somebody's making $4,100 taxable wages of $4,176, we're not gonna be able to use the table. And actually, if they're making exactly $4,175, we can't use the table. Because recall, you have to use the next line, yep, because this second column is less than. So it's gotta be less than that number, so obviously if they're making $4,175, that is not less than $4,175. Monthly table, here, and again, it's right up at the top. $8,350. Now you also have a daily table, and I will tell you that, again, in your homework, there is one problem where somebody is paid on a daily basis, so you're gonna have to use this daily table if you have that problem in your homework. So even though these four are the most commonly used, there are some other, there's even a quarterly, oh, I guess there's not a quarterly table on there. So let's do some more practice with this. All right, I'm going to give you the taxable wages just so I know that we're going to stay underneath these thresholds. 72, and they're paid monthly. What's a filing status? Give me a filing status. Married filing status. And checkbox, yes or no? No. All right. I'll do the first one here with you. So we're going to have to find the monthly table, which we've got up here. Locate the adjusted wage amount. So $31.72, which is going to fall between $31.70 and $32.10. Find the proper filing status, so it's going to be one of these two columns here. Because there is no checkbox, we're going to use standard withholding. If the checkbox was checked, we'd be using the checkbox withholding. So it's the second to last column. So the amount of withholding in this case is, we get $226. Okay. Questions? So the most common mistakes that I see that students make are simply, probably the most common one is simply choosing the wrong table for the frequency of pay. So make sure that you're doing that. Also, usually this one isn't so much a problem finding the right line, but choosing the correct column again. And keep in mind that the married filing jointly, if it says, and I don't think you have any problems that talk about qualifying widow or widower, or I think what's the other, they call it, they have another name for that status, and I can't remember it off the top of my head. But it's the same as, I don't know why, maybe they just didn't have room, but like they included both filing statuses, they're single or married filing separately, but the married filing jointly, they didn't put qualifying widow or widower up at the top, but I think there's an asterisk somewhere that mentions that. All right, so let's look at another one. Let's do a different color so that this is clear. So, 430. Give me a filing status.
Married.
Married. Filing jointly? Okay. How frequently is this person paid?
Monthly.
Monthly? All right, hope they're not working very much. Checkbox, yes or no?
Yes.
All right. You guys give it a try. See what you come up with. It's a second job, that's fine. Well,
This is
I
the
mean, that's why the
second
check that,
Yeah.
well, it's roughly equal amounts of pay, but. Maybe they're a student,
There you go.
going to school full-time and
Yeah.
working Fairway on the weekend, I don't
This money's for extracurriculars.
know. That's right. Just some gas money. Hopefully they're not driving very far. Okay, do we have anything yet? 0?
Zero.
Alright, let's take a look. Find the right table, monthly. At least 0, but less than 580, that's a very big range there. All of it is 0. That was pretty simple. Let's do something else then. Let's say, so you guys give me some taxable wages and make sure it fits on the table because we'll get to the higher wages here.
2250.
$22.50. Okay. Filing status,
Head of household.
head of household. How frequent?
Bi-weekly.
Bi-weekly? And checkbox, yes or no?
No.
No. All right, have at it.
That's what I did.
Tell me what you come up with.
I didn't file for the household.
Anybody find it yet?
And we check box.
170? Okay. Let's take a peek. So we gotta find the right table, bi-weekly.
Should be 164.
164, we had a different number here, okay. So 2250. So we've got, that falls right on the line. So which line are we gonna use?
Second.
Second line, right. So we're gonna use this one here. Oops.
We'll use the third number because the box is put down.
Okay, head of household. No checkbox, which means standard withholding. So we're gonna take 164 there. So the 170, I'm curious, Caesar, where did you locate that? Because I'm not picking on you, it's a great example for maybe choosing the wrong table. So we got bi-weekly. What's that?
Not sure if it's here. On mine it's between 2245 and 2270.
2245 and 2270. Are you using the, let me take a look at which table you're using here. Okay, so bi-weekly. Oh. Was this, where did you play on this? Right, this is, oh, okay. Okay, I'm gonna change that, because this is the 2022. Go back to into the module. So I've got the wrong table in the agenda. Look at that one. So that's another thing, that if you were doing this and you had the wrong, so go to, yeah, here. Thank you for, I'm glad that happened, because now I know to change that. Okay, so that was the 2022 table, that 170. So actually, so it went, the withholding amount went down, which is kind of weird. Well, I guess it's not, because the tax brackets change every year, and so for inflation, so that means that the amount of income that is going to be subject to that tax rate is probably going to have to be higher. So that's why the withholding went down between those 2 years. But that's good. Thank you. I have to change it. So don't use this one. I got to change it. And that's from, and I would have, yeah. So on Tuesday when I'm putting this together, I would have noticed that. All right, so 164. Let's do another one more here before we get into the really fun way of calculating this. So somebody give me some other taxable wages.
125.
125?
We're gonna go daily.
Okay. 125 daily. Filing status? MFJ. And checkbox, yes or no?
Yes.
Yes. All right, let's take a look at that daily.
They're being decent. They're claiming taxes on their drug money.
That's still zero. No, it's not. Not like me.
Okay, I won't.
Where is it? Is it at the bottom? Yeah. Yeah. That still counts. No. It's right here. Mary. So, right here. Eight,
810?
ten.
$8.10. All right, so we are going all the way down. There we go. All right, so 125. Again, we're going to use this second line. It's right on the line, and they are married filing jointly with the checkbox checked. So $8.10 there. Okay.
Checkbox is quite a jump there, isn't
What's that?
it? Checkbox is quite a jump there, isn't it?
It is.
$6.
Yep. It is. And if you look at it, yeah, so like here, at this income level, this is the monthly, but you go from 491 to 830. It's a big difference. Okay.
What is that?
Well, the checkbox means you've got more than one job. So you've got some other income there.
It's only.
Okay. Okay, what I want to do, I do want to, before I go to the percentage method, I want to look at this. Because this can be helpful to you if you kind of forget how to do it. Or I guess any questions before I move on to a different, that's fairly clear, right? You do have to make sure, you've got the right, you gotta make sure that your professor has posted the right year, first off. Or you have to go look it up, which is on the IRS website. You can just go to the IRS website and pull it up. That's where I pulled it up from. But yeah, make sure you got the right year. Make sure you're looking at the right table. Those are the, that table is a big source of consternation. Okay, so if you wanted, this table is used to determine what's called the tentative withholding amount. And there are problems that you have been assigned that actually use this other, where to go? This table, which we will get to, but that's kind of why I want, you can tell that this is more involved. We'll get to that one after a bit. I'm getting ahead of myself here. So this table, sorry, just remember. If you go through line by line on this table, it will take you through all of the steps. So, and it will help you to determine that wage amount. Now for us, that adjusted wage amount, we just came up with the adjusted wage amount, right? But this would help you to calculate what that is if necessary, using the W-4 form as well. So first line on this, enter the employee's total taxable wages for this payroll period. So it is assuming that you have subtracted any pre-tax deductions already. Okay. Enter the number of pay periods that you have per year. So you've got 26, and they tell you right up here what your frequency is. Enter the amount from step 4A of the employee's form W-4. Now, if there's nothing in the step 4A, which 4A, if I recall, was additional income. So additional income that they want taxed. So if there was something in step 4A, you would want to go ahead and use this this worksheet to help you to calculate how much withholding that you're going to apply. Divide the amount on line 1C by the number of pay periods on line 1B. So presumably, let's say we had, so we've got taxable wages of $1,400, and then this particular employee wants to have additional withholding on additional income that they have coming in somewhere else. So maybe they've got interest income of $1,200 a year, right? So first thing you have to do is multiply that total taxable wages per payroll period, the number of pay periods per year. So we're annualizing this pay. So let's just say we've got 12 pays, which gets us to, oh, my calculator's still here. It hasn't disappeared. That's great. 12 pays a year. So on an annual basis, 16,800. So this is their wages, taxable wages. But they've got that additional interest income that they want to have. Let's say it's 1,200 interest. So $18,000. This is how much they want to base their withholding on, right? If there was something listed on step 4A on the employee's W-4. Divide the amount on line 1C. This is 1C. So this would be 1C. Let's see, this would be, no, sorry, this is 1C. This is 1A. This is 1B. And I did a subtotal of that, so enter the amount from step 4A, so 1,200. What are they doing here? So enter the amount from step 4A, yes, so that's 1C. Add lines 1A and 1D. What's 1D? Oh, so now we got to divide this by the number of pay periods. This is 1D. So 18,000, what is that? $1,500? All right, so 1D. Add lines 1A. I did something wrong here. What did I do? Oh, they want us to divide this by. I put an extra step in here. I wasn't following the form. I was just doing it my way. Sorry. Sorry. 1C divided by 12 is 100. So that 100 is line 1D. All right. Now, line 1F, I'm sorry, 1E, add lines 1A and 1D is 1,500, so that's on the following the form. Enter the amount from step 4B of the employee's form W-4. That was if they had any, they were going to itemize their deductions or had some other types of deductions where they wanted to subtract from the taxable wages and take that into account. We'll say there's nothing on there. Divide the amount on line 1F by the number of pay periods. Well, if we had 0 on 1F, then 1G is going to be 0. Subtract line 1G from 1E. There was nothing on 1G, so the adjusted wage amount is still gonna be 1,500. This is where you look it up on the table then. So this is where in the case where you've got additional information on that W-4 over and above these 4 pieces of information. So if they've filled out part 3 or part 4, which would be the child tax credit, the credit for other dependents, or that additional income that they want to have withholding from, or itemized deductions. If they filled that out, then you would want to use one of these worksheets. If they haven't filled it out, you really don't need to use the worksheet because you've already got the taxable wage. You've got these 4 pieces of information, right? This is just to adjust the taxable wages when those other pieces of information are entered on the W-4. So figure the tentative withholding amount. All right, so we got $1,500. They're paid monthly. We don't know this other information. Monthly, filing status, we'll say single. Taxable wages, there's our taxable wages right there, $1,500. Instead of the $1,400, we're gonna make it $1,500 because they got that additional interest income. And we'll say yes for the checkbox. Then we could go and follow these directions. Figure the tentative withholding amount. And that's looking up on the table based upon all of that other information. So in this case, what we've got, so we need the monthly table. Monthly 1,500. Right here's our line. She's single and checkbox is checked. So we're going to use the very last one. So $102. That's how much withholding we would withhold from there. Now the rest of this form, let me show you. If there was any additional amount, if there was any amount listed in step 3 on the W-4, you would need to fill out this part as well. This is for the child tax credit and credit for other dependents. This is going to be a reduction in the amount that's being withheld. Essentially what they're doing is if you've got a $2,000 child tax credit, now that's going to reduce your withholding by $2,000 over the course of the year. They're going to spread that out. So you're not going to get it, you still qualify for it, but essentially you're getting it up front rather than getting the benefit of it at the time that you file your tax return. So enter the amount from step 3 of the employee's W-4. So let's just say that we did have, I'm going to erase these for the sake of space. We had in step 3, and recall, I'll pull up the W-4 form to remind you what it looks like. Oops. So step 3 here, total income, if your total income will be 200,000 or less, 400,000 if married, filing jointly, multiply the number of qualifying children under age 17, multiply the number of dependents by 500. Okay, so let's just say that this individual had one child who was under the age of 17, so they had filled out and entered 2,000 here. That other calculation that I did means that they had other income not from jobs. They had entered $1,200 here for that interest income. So now we go over here. Enter the amount from step 3 of the employee's form W-4. So in 3A, we're going to enter $2,000 on this form. Divide the amount on line 3A by the number of pay periods on line 1B. So it's on a monthly basis. So 2,000 divided by 12. Whoops, I did that right? 166.67. So 3B, 166.67. Cover it up, the instructions. Subtract line 3B from line 2A. Well, this was line 2A here. Because that was, I didn't write that down when I initially did that, but that's when we looked up the amount of withholding. So subtract 3B from 2A, well, we're getting into negative territory here. If 0 or less, enter 0. That means she'll have no withholding because of that child tax credit, okay? Because she's claiming. Now, you don't, if you are entitled to the child tax credit, you don't have to claim it on there. They don't mind if you have more withholding than what you are entitled to, but they do mind if you have less withholding than what you're entitled to. They don't want you to be under withheld. By they, I mean the IRS. Doesn't want you to be under withheld. They don't mind you being over withheld, okay? Then enter any additional amount to withhold from step 4C. And recall 4C here is extra withholding. So if this individual wanted, say 4C had on the W-4 had $50 listed, because she knows that that child tax credit is going to wipe out her withholding, but she needs to have something withheld, right? So $50 in that 4C, enter the additional amount to withhold, so line 4A on here would be 50. Add lines 3C and 4A, oh I didn't put 3, so this was 3C here. 3C was 0. 4A, 4B equals 50. So we're just gonna withhold $50 every paycheck for this individual. So like I said, this can be used and should be used if there's any additional information in that step 3 or 4 on the W-4. But all of this stuff works together with the W-4. All of the information that you need, aside from, of course, the taxable wages, which you're gonna have as a payroll, the payroll clerk. Filing status is on the W-4. You know what the frequency of pay is because you're preparing the payroll, and then the checkbox as well is on the W-4. And then all of this additional stuff is on the W-4 as well. So you can extract all that information from the W-4 in order to prepare this. Questions? I know that's a lot of steps. Do you want me to go through another example, which is a little more clear than what I just did here, because I was kind of... Do you need me to go through another example? No? I got a couple of nods, I've got a couple of shakes. Okay. All right. I won't go through another example. Let's move on to the percentage method. Still need these same 4 pieces of information. Still need the W-4. Difference here is that now our income has exceeded the limits of that table. So let's look at percentage method tables.
Do you only do the percentage if it's outside of the bracket, or do you do it?
You can do it, you can still use the percentage method even if the income levels are within the table. You can use either one, but you have to use the percentage method if the income is over. Yeah. And that's simply because the tables don't go on forever. I suppose they could. You'd have an Excel spreadsheet that's infinity, but they just don't go on forever. All right. percentage tables. Like I said, same 4 pieces of information that we need to use at a minimum. Our tables again are, well, schedules. I guess they're schedules. I don't know what the difference between schedule and table is, but up at the top is our pay frequency. So as you can probably guess, we've got a bi-weekly, a weekly, semi-monthly, monthly, daily. I think this one, oh, they don't have the quarter. They used to include a quarterly in there, but so there's our different pay frequencies. Let's look at one of these. And then over on the left, these left-hand tables are standard withholding, so no checkbox. Right side, checkbox. Filing status. These schedules are listed here. So married filing jointly, single or married filing separately, head of household. Again, qualifying widower would be the same as married filing jointly. So let's take a look at how this works. It looks really complicated, but once you get started in it, it's not bad. And the instructions are actually there, but you have to read them properly. And it's not like reading something right across the line. And I'll show you why I mean that. So again, we've got an income range. So let's use standard withholding for married filing jointly as an example. We've got an income range. At least this amount, but less than this amount. So once again, if it's right on the line, you're going to use the next one up, right? Because that's not less than. So that works the same. So you can start here. If the adjusted wage amount, and it says line 1H, so this one has a worksheet as well. So that's what they're referring to there on line 1H on that worksheet. If the adjusted wage amount is at least this amount, but less than this amount, the tentative amount to withhold is, and you can see the instructions kind of go up and down on this. So at least down here, less than down here. The tentative amount to withhold is whatever's in this column. This is, and tentative is just that. There's going to be some additional amount that we're going to add to that. All right? Plus this percentage, whatever is appropriate in this column, based on the income, of the amount of the adjusted wage that is over this amount. You can see this amount here is the lowest of the range here. Let's do an example. So let's say we've got somebody, we're again married filing jointly. Frequency of pay, what is this, bi-weekly? Checkbox, no. Taxable wages are $54.28. All right, $54.28 is at least $45.06, but less than $84.02. So this is the line that we're going to use. Right there. Okay. The tentative amount to withhold is $395.98. What I suggest is once you have that tentative amount, write it down. Just kind of write it, set it to the side, because you're going to need it again in the calculation. All right, so our tentative amount, $395.98. Plus 22% of the amount of the wage that exceeds $45.06. So what we're going to do is we're going to take our wage, which is $54.28, and we're going to subtract $45.06 in order to get the amount of the wage that exceeds the $45.06. So what do we have here? 22, 922. So that's the amount of the wage that exceeds that threshold. Multiply it by this percentage. times 22%,
202.84.
202.84. We're gonna add that to this. Okay? You can give me
598.82.
98.82. That's our withholding. Did I scare you before and then?
You said it was.
It's more complicated than the other, obviously, looking it up on the table, but you're right. And the instructions are there, you just have to read it properly by going kind of up and down there. All right, let's do another one. So you guys give me the information. Taxable wages. And now you can be ridiculous if you want. Well, that's a little too ridiculous, but.
25K.
25,000.
And $1.
And 1. Filing status.
Single.
Single. Not for long. Frequency of pay. Monthly? Okay. Daily. Checkbox, yes or no?
No.
No. All right.
I didn't realize you were figuring out coaches.
Yeah. All right, so monthly, so we're gonna find the correct table for monthly. All right, there's monthly. No checkbox, so we're gonna use the standard withholding rate schedules. And they are single, so we've gotta choose this table here. Look, it's not even the highest. Not even the highest. You're not even in the highest tax bracket at 25,001.
Slacker.
You're not even in the second highest, actually. All right, so 25,001 is at least 16,329. Oh, I'm sorry. At least. Oh, it is the second lowest. I was thinking it was 20. 20,425 between 20,425 and 49,331. All right, so let's set we've got our tentative amount to withhold here is 4402.72. All right. Then, did I get that right? Yeah. 35% of the amount of taxable wages over 20,425. So 25,001 minus 24, what did I say? 24,425.
45.76.
All right. That multiplied by our tax rate of 35%.
1601.60.
We're gonna add that to here.
$6,004.32.
004, and how much?
32.
32 cents.
That's the light tax rate.
$6,004.32 for federal income taxes. Okay?
It's on like they're paying taxes, but some people ain't even
And more than
here.
Yeah, that's on a monthly basis, yeah. So they've got like 72,000 withheld in federal income taxes.
that.
That's what they're paying.
All right. Let's do one where we compare the percentage method and the wage bracket method. So see what the difference is that we get. Okay? So now we're gonna go back to kind of a lower income. So, give me some taxable wages.
4,500.
4,500. So we're gonna need a frequency of pay that's probably semi-monthly or monthly.
Monthly.
Monthly. Filing status,
Single.
I'm sorry,
Single.
single. And checkbox?
Yes.
Yes. All right. So let's do it both ways. Since these tables are up, first we'll use the percentage method. So, monthly, we've got the right table. Single, again, yes check mark. So that means we're gonna use the tables on the right-hand side instead of the left. All right, so 4,500, so here's the table that we're gonna use. 4,500 is at least 2441, but not more than 2551. So our tentative amount is 214.52. Okay. Then 22% of the amount over 2441. 4,500 minus 2441. Anthony?
667.50.
6, what?
667.50. No, I'm on the wrong one, sorry,
Yeah.
just a second. 2,059.
2059?
Yep,
All right, times what percentage?
22%.
22%. So 2059,
452.98.
452.90.
Yeah. You did that in spring.
Those two together?
Already, you got the history of his life.
667.50.
Okay, 667.50. Now what I want you to do, and I want you to do this on your own, is go to the wage bracket tables and tell me what the withholding is using the wage bracket tables and those same parameters.
Single checkbox. So, yeah, it should be the last one.
670.
670?
Yeah.
Anybody else find that? Yep. Let's go look at it. So we gotta go way up here. So we gotta find the right table again. Monthly,
Page 23.
page 23.
Yeah, that's not too far.
Okay, monthly, 4,500.
Check.
4,500 is between 4,490 and, whoops, and 4,530. So this column here, single, so it's the one of the last two columns. Checkbox is yes, so it's gonna be that one. So 670. $2.50 difference. There's a difference because you notice on the tables, we've got a range of income here, right? 44.90 to 45.30, so we've got a $40 range of income. So anything that falls within that $40 range of income is gonna be 670. So 44.90 will be 670. 45.29 will be 670. So it's not exact. It's calculating based on the very middle of that range. Okay, so if you fall somewhere aside from the middle of that range, which we do, we kind of fall on the lower end of that range, it's going to be slightly different. It's never going to be terribly different, a couple bucks here or there. Sometimes it'll be exactly the same. So the percentage method is obviously much more precise. It's coming down to the cent. Now, oftentimes what employers will do, they still won't withhold using pennies, using cents. They'll round it to the nearest dollar. So this would be rounded up to 668 in the withholding, and that's preferable because guess what? When you're filling out your tax return, they don't use cents. It's always rounded to the nearest dollar. So why give them an extra 49 cents, right? if you don't have to. So very, very close to those two. So it's a good way if you're within, and I think you do have some homework problems as well that have you use both ways. Okay. Questions? All right, so now that that's fresh in your mind, I've got some practice problems for you. In the, it says 2022, I'm sorry, I used this last year too. Call that 2023. I need to change that, I didn't realize that I did that. Different problems. I want you to use both, if you can, use both methods to calculate the withholding. Okay, so there are gonna be some problems though where you can't use the tables. You can't use the wage bracket method. You can only use the other way around. No, that's right. You can't use the wage bracket method because the income's too high, right? So use the rest of the 9 minutes that we have to start working on those. We'll look at them as well next week when we come back, okay? And you can work together, it's fine. This is extra exercise. There's some complications on some of these. So, like this one, she contributes $100 each pay period to health insurance. That's a pre-tax, benefit, not benefit, I'm sorry. That's a pre-tax contribution. So that $100 is gonna be subtracted from gross income before we do the calculations. Also, she wants an additional $100 each pay period. That also adds an additional complication, right? So on that W-4, you'd have to go through and add that in.
Because that just gets added straight to the end, doesn't it?
Yeah. This one, let's see. Oh, this one's even more complicated. We got married filing jointly with dependents, biweekly pay. 3 dependents, ages 7, 14, and 18. So it's helpful if you use the W-4s while you're doing these. Like fill out the W-4, pull up a W-4, enter it in. Contributes to a 401k and $200 each pay for health insurance. Give those a try. We'll go through them next week.
Essential checkbox.
I authored before.
How much?
Should we do the other one?
There's another one with so just FYI, gym membership, off-premises gym membership that the employer pays for. So that would be an additional amount that's added to taxable income, right? You got it. Just some little intricacies. First couple are easy.
No, you said we had nothing together.
I'm sorry?
Both
It's
ways.
also people to finish, right?
Like I said, ignore the 2022 part there.
Yeah.
This.
Single checkbox.
For
Right? Yes, there.
If you're using the percentage method, use the cents. I was saying because it's not required to round it to the nearest dollar, but a lot of employers do. But for these purposes, because I want you to see the difference.
This one was like on that.
38 cents. That's one was like, we rounded to the dollar. It's the same add-on.
What's the math on? Here,
Bi-weekly. 24.
Yeah, you're welcome to, it's time, so. Alright. I got that updated.
Okay,
I see
good.
there's a couple other things that I need to update too, so thanks for making me aware of that.
Yeah, of course.